Pretty simple sort of day. Nothing too crazy. We obviously, at the end of the day, the market just skyrocketed. So, yeah, we're going to take a look at the dollar, the bonds, the overall market, S&P 500, NASDAQ, and IWM. All right, so without further ado, let's get started. Shouldn't be too difficult to really look at what's going on today because seasonality for August is generally flat. So that's what we basically saw today. All right, so let's get started. All right, so this is a daily chart of Apple. See that it closed on its highs here. You could look at the MACD indicator as well. The MACD crossed above, and it wants to pull this yellow, slower MACD line up, the orange, right? And for that to happen, it needs to continue to rise. So it's technically doing what it needs to do. Continue bullish move. Obviously, it maintains trend line as well. Tomorrow's level of support for the trend line is going to be 195.30. And we have earnings on Apple Thursday after hours. So we could continue to rise into Thursday after hours when Apple reports earnings. So there's still potential room to the upside here. But I just wanted to first start off by looking at Apple. The main things that we need to look at right now are the dollar and the bond. All right, so let's just quickly take a look at that. Okay, so the dollar is important to watch because it has an inverse relationship with the market. If the dollar is doing well, then that means that the overall market should be falling. And right now, this looks like a bullish move on the dollar. It's holding these levels of support. But we need to see if the dollar can really break above this level of resistance. Currently, right, when looking at the MACD indicator, the slower orange MACD line is curling upwards. The dollar is doing what it needs to do for a continued bullish move. But that bullish move, in my opinion, on the dollar needs to happen within 2 days. If it doesn't, then in my opinion, I mean, if we get a pullback, then it's going to be really hard for people to basically buy the dollar back up because this move that we saw on Thursday on the dollar, so we basically wicked below major support here. Okay, so you're looking at the dollar right now. When you wick below a support, that is usually a stop hunt, right? So they were basically just trying to find people that had stop losses at the below this candle here, right? And we can see that we wicked below that low and then ripped to the upside. So this was a bear trap turned into a very, very bullish move, right? So now, based off of this bullish move, if we cannot break above major levels of resistance, that's obviously not good, right? Because how much more of a bullish move can you hope for? This was a very, very bullish move. My point is that it needs to continue rising because this was a very, very bullish move. And if it takes too long at resistance, then it's not a good sign. So we really want to see the dollar break above within the next 2 days. And if it does break above within the next 2 days, that's going to be very bearish for the stock market. But yeah, basically, all eyes are really going to be on the dollar. We need to see if it can hold these levels of support, and even if it does bounce, or even if it does fall to these levels of support, it needs to hold and then just continue this upside momentum. This is very, very bullish momentum, and it needs to hold this low essentially. Ideally, right, what you want to see is it for it to hold above the 38.2% fib of this candle. So, which should basically be around 101.4. And if that can happen, then that's a very, very strong move on the dollar. And yeah, that's really it for the dollar. Let's go ahead and take a look at the bonds. All right, so the bonds are important as well. Basically, the reason why we look at the bonds and the dollar is because they're added explanations of what is going on in the stock market without just relying solely on the stock market price. So the bonds and the dollar help paint a full picture of the market. So the bonds are important because it has a more correlated relationship. So if the bonds are doing well, then the overall market would also be doing well. And right now we see that it's holding at a level of support. Clearly, it does not look that bullish, right? But the bonds affect the market at extreme. So if the bonds basically break below these lows here and start to show a lot of weakness below these lows, that is going to, in my opinion, start to show cracks and weakness in the S&P 500 and the NASDAQ. So right now, this is clearly not an extremely bullish setup. We are holding these prior levels of support. So technically, support is being held, but momentum is clearly to the downside. So this basically just needs to hold 124.30 or really the high, the open of this candle for a continued move down. Because the momentum clearly is not bullish. So it's going to be interesting to see what happens with the bonds and the dollar in the next 2 or 3 days, especially prior to Apple's earnings. So yeah, not really showing that much on the bonds. Doesn't look too great. Dollar doesn't look weak as much as the bonds look strong, right? So the like it's teetering in the favor of dollar bulls, which is basically teetering in the favor of bears on the market. And then the only issue is earnings on large tech. So yeah, there's that for the bonds. Not really much to look at here. We just quickly need to take a look at the S&P, the NASDAQ, and the Russell. All right. All right. So very, very simply, the Russell 2000, unlike the SPY and the NASDAQ, broke above its range. All right. So the Russell obviously had a huge day today. It's the biggest winner, up 1.6%, 1.16%. The NASDAQ is basically flat, and then the S&P 500 was only up 0.19%. So clearly, the Russell is starting to show some strength. And the Russell showing strength like this affects the S&P 500. So if the Russell is very strong, then the S&P 500 basically keys off that strength. So what we're seeing right now is the S&P obviously was more green than the NASDAQ because of the Russell, right? So this is still technically bullish. We're seeing buying pressure coming into the economically sensitive stocks in the Russell 2000, and more economically sensitive Russell stocks are reporting earnings this week. So we could see a continued rise in price for equities until even the end of the week. This still looks very bullish on the SPY until we get to 460, 461. But this is where you don't want to play around with the last few dollars on the SPY. This is, again, technically this is not really a place where you want to start going extremely long. We are bullish until we get to basically this level of resistance at 460 to 462. And then until then, yeah, I mean, SPY is rising. We need to see tomorrow if basically for two things that you need to watch for in the pre-market tomorrow. So clearly the Russell had a big move, right? For a continued move to the upside, the Russell needs to continue rising above today's close. So it needs to break above 199.26, which was the most recent high, right, that we had from back in January, where we started this, right? The most important resistance level, 199.30, right? So either the Russell needs to break above that and continue showing strength, or the NASDAQ needs to start breaking above 384.75. And if both of those things happen, then tomorrow the S&P 500 is going to be very, very bullish, and we should easily see 460 on the S&P tomorrow. So depending on all of those things, once we get to 460 to 462, that's when a lot of people are going to start adding to shorts, and then we could get an impulsive move to 464 to 465. And at that point, this would coincide with that same percentage gain. Basically, remember what we were watching, the last two times the S&P gapped up like this into the Bollinger Bands, it had a 4.8% increase and a 4.3% increase. So if we were to take a 4.4% increase. That would put us at 464. So we should still be rising here according to the past 2 times that this happened. The past 2 times that we see extreme buying pressure like this, the SPY continues to rise. So there's still more room to the upside, and it would put us around the 464 area. And if we get to 464, that would only happen if we get an impulsive move above 460 to 462. So once we hit 460 to 462, people are going to start shorting. An impulsive move above that would rip everyone that's trying to short, and then yeah, basically it's going to be pretty fun to start averaging into shorts as we get up here. But the higher we get, the more aggressive I'm going to start being on puts. Right now we have puts for 2 months out, and yeah, as we get higher here, it's gonna start looking like we're gonna get puts within the month. So it's gonna be pretty fun to see how things end up there. All right, so yeah, it's gonna be pretty fun. But aside from that, that's basically the game plan. That is what I'm looking for. We need to see continued strength out of the Russell and the Nasdaq, or some strength out of the SPY, and the dollar needs to break above these resistance levels. And if it can do that, only if it can do that, that's when the overall market is going to start showing some weakness. But yeah, it's gonna be pretty fun heading into the next few days. So I hope you guys had a wonderful first day of the trading week today. Tomorrow is the first day of the month. Well, and once again, you guys have to remember that August is one of the worst, not worst performing months, but it's one of the most flat months of the year. So, you know, um, currently, if we look at it on the month, for the month so far, we're up 3.2%. When on average, according to seasonality, the SPY would be up 2.2%. Currently, we're up 3.27%. So, we could have a flat month here, and it makes sense. We could we could rise, have like a impulsive move above, and then break lower, and then bounce up close. So that would end up making it a bit flat. So yeah, let's see if that turns out to be the case on the SPY and the overall market. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow. Thank you. Hope. Um. Yeah, I have to go. A bunch of stuff. Yeah. Hope. All right. Love you guys. Take care.